Battle stations, everybody. Battle stations, everybody. The pivoters are in control. Welcome to the Flow Show. It's Friday, and carnage and blood on our screens if you're in dollar yen. Morning, Kate.
Good morning, Ryan. Good morning, everybody.
How are you doing?
Yeah, well, yesterday I had a really good day. Today I don't know yet. I'm trying to catch a knife here, but the knife's a little bit hot. I'm gonna need a couple of butcher's gloves.
Right. First things first, please. What the F happened here in dollar mix?
It happened right.
What's that all about? What's that bit in green all about? I'm pissed off with that. And let's just give some background to the viewers. We all jumped on shorts on the break of that big 1940 area, all sitting pretty. I took some profit off down here, went out for the evening, and then that happened, and I got stopped out in that move. What happened?
I don't know. I just got kicked out of the meeting as well. It seems like everything is happening right now. Yeah, it happened just literally minutes before the meeting results made. I think the market just went for some easy stops, and it's been all over the shop. And then yeah, as the decision came out, it started to filter back lower. But as you can see, there's quite a big rebound going on today.
Yeah.
And I think the global theme of the day, after the dollar being shot to pieces yesterday, is the big unwind of the unwind of the big yen short. I'll come back to it perhaps a little later, or I'll say it now, but it seems the market is very, very short gamma in dollar yen. And I think with what happened yesterday on the CPI, in combination with other central banks already starting to say that they are looking to scale down at least the hikes, looks like a few really big boys decided to get out of all their yen pairs, or at least a big part of it. As you can see, all the yen crosses are absolutely getting hammered.
Yeah, yeah. Yeah, we'll look at that in a bit. Just a couple of things I want to say first and foremost. Firstly, it's very dangerous at the moment. I mean, I don't think any of us was expecting this sort of reaction after that CPI report yesterday. You know, dollar yen is just clipping around, and it's very dangerous to try catching the knives. Personally, I'm sitting out and watching the show until things settle down a bit. The US is half closed today for a holiday. Most things are open, but I think bond futures and everything are open, but there's some other bits and pieces closed. So it's not going to be a full day in the US. So be careful of the volatility there. Secondly, we will be holding a 2-minute silence at 11 o'clock GMT. So in roughly 27 minutes. For remembrance, obviously today being Armistice Day, so we will be pausing, just switching off the mic at 11 o'clock for that for 2 minutes. So if we go silent, you know what that is, but I'll put a little message in the thing anyway. Right, so let's get stuck into it. So lots going on. It's been a bit of a perfect storm for risk, as well as what's happening in yen pairs. Just another quick public notice there, if you're using TradingView, I don't know if this has happened at the broker level, but some of the feeds have been going a bit wonky. As you can see there, this feed, which is FXCM's, froze a few minutes ago, hence why you've got a bit of a gap there. If you are using TradingView, look at the IDC feed, because that's been a-okay. So just in case you're seeing something wonky on a few pairs in TradingView, that's the reason. But anyway, it's been a bit of a perfect storm, because we've had this CPI data, we've had the pivoters coming out, dumping the dollar, yields dropping. They've really taken this by the scruff of the neck. But we've also had some easing of COVID measures from China. All the stuff that was rumored last week and this week and was denied officially has come to pass. So the first things first is that they're going to ease quarantine rules, just shorten the time frame for people going into quarantine, be it at home, be it wherever, traveling, that sort of thing. They're also halting or going to stop the fines that they've been putting on airlines who bring in COVID cases, whether they've known that or not. The health committee, the NHC in China, are going to minimise the people under COVID measures. Will no longer determine any secondary close contacts. So what the current rules are is that if you get COVID, they want to know your immediate contacts, like immediate family, that sort of thing, and then secondary contacts from those. And they put all those people under quarantine or testing or whatever. So the secondary level, they're not going to be looking at that from in the future. They will also not arbitrarily require key firms to suspend operations. So like we've seen with a Foxconn situation, and people bolting for the exits, and any way they can get out of town, they're not going to be arbitrarily suspending these sort of firms. Now, this is all coming still while cases are rising. So that's been a bit of a risk additive, if you like, to what we've seen in markets at the moment. So a bit of a, as I say, a bit of a perfect storm. Quite funny, isn't it, Kay, that they suddenly announced all this, and just before you come in, they are also holding a press briefing on COVID optimization policy, or whatever they're doing, on Saturday. So they could be announcing further easing of measures, or just reiterating what we've heard in the lines today. So a bit of a weekend risk event there. Well, what are you making of it, Kay?
Yeah, I mean, we've said, right, what was happening in social media. We didn't hear anything official yet. They were still fighting back against the relaxation of rules until yesterday morning, and then now all of a sudden they are starting to talk about it. It's so there was fire when we saw the smoke. Yeah, and I think they have, despite having the highest number of COVID cases to date, or at least in the last round of fresh cases, I think they start to realize they can't continue to keep everything closed, because it's just hurting the economy too much. And so yes, this is going to be a gradual reopening, in my opinion. But yeah, here we are, and the Chinese yuan responded to it in quite some fashion as well. We went down to 5, I think, in the dollar to CNH. So
yeah, big moves there, very big moves. Again,
I don't know what to really do with it right now.
No.
It's a fact that if we get any decent rallies in dollar CNH, with how the dollar is reacting right now, I think we'll see sellers probably.
Yeah, definitely.
Somewhere around 7.15, 17 probably. But we'll have a look at the charts later on. But well, you have it over there. The 697 to 703, I've got it. Is a pretty big zone.
Yeah.
For stuff.
Yeah, and then obviously, yeah, I mean, we've got lots of levels coming into play here. But that 603 was a prior S&R point, as you can see, going back to 2020. So plenty to look at there. Now, who wants a laugh? Because here's dollar yen going through 139. So here's a big laugh. Dollar yen has done what since yesterday? 800, nearly 700 pips, just over. Yeah. And we had the Japan's currency diplomat Kanda coming out saying he's closely watching FX with a high sense of urgency. Unbelievable.
Yeah.
I take it this is now too volatile the other side, mate.
Well, you know what? When they came out with it, I didn't really watch the I didn't have the time to scroll back to the 5 minute, but I think that's the time where dollar yen popped up to 142.5 overnight. It's really, yeah, it's very funny. I think stuff is taken a little bit out of context. If Kuroda would follow his own rules, they should have been intervening yesterday to buy dollar yen. And actually, if you look at it and think about it, they could use this move to buy some back of what they sold earlier, right? With 10 big figures lower than where they intervened last time.
Yeah, we're getting the what's this? The Madala Central Bank is intervening in the FX market. So that's what's that? That's the Philippines, isn't it?
Sorry, I didn't catch that.
Yeah, there was a headline: Philippine Central Bank is going to stick to 75 pip hike plan and intervening in the FX market as needed. So obviously some pains being felt here. But yeah, as Kay says, good opportunity for the Bank of Japan to take some profit on their prime interventions, all up at the 150s, 149s. So good profits for them. And speaking of intervention, the Treasury slipped out their latest FX report, semi-annual FX report yesterday afternoon during all the goings on. The headline from that was that no major US trading partner has manipulated FX rates in the past 4 quarters to June 2022. But Japan is on the monitoring list. I don't know if that's a change from their last report. I'll have to check back. For those of you in our chat room, I've put the report in the newsroom. That obviously doesn't include everything that Japan did for intervention in September. But as we've already sort of learnt from the US side, at least, they've not been too fussed about that. The intervention that they did, it all got explained away and everything. Yellen herself was saying that basically, yeah, they weren't bothered about what Japan was doing. But that was the manipulation list coming out. And obviously, we've had a flood of Fed speakers coming out after the CPI. So I'll just go through the list of choice comments. Fed's George said that monetary policy clearly has more work to do. Mester said currently views larger risks coming from tightening too little. So a hawkish slant from there, from Mester. And the Oct CPI suggests some easing in inflation. Fed's Harker said it was possible to pause when the Fed's funds rate is at 4.5%. So we're starting to get a few numbers coming out from some of these Fed members, but largely they're going to continue on track. There was quite a bit of brushing under the carpet of the CPI report. Logan came out and said the CPI data was some welcome relief, but still a long way to go. And the process of cooling the economy is just getting started. But it could soon be appropriate to slow the pace of hikes. And Daly was a bit two-way as well. CPI was good news, but one report isn't victory, and sees the Fed funds rate at 3.75 to 4% as being moderately restrictive. Then she said the time is now to step down in hike sizes, but pausing is not even a discussion now. Also went on to say that we'll probably need to tighten more than the September forecast suggests. So a bit of a line from Powell, that one, in that they may see the rate ceiling going a bit higher at the next set of projections. But obviously the market is ignoring that completely right now, as we can see from all the moves in the dollar. Over to the Bank of Canada. Old Stiffers was out in I can't remember if it was a parliamentary meeting or something, but he said the labour market is unsustainably tight and that it faces a difficult adjustment to come. Wage growth looks like it's plateauing. So if you remember, we got a bumper Canadian jobs report same day as the NFP. He's sending out the warning pigeons for that one. S&B's Makler said further hikes are not out of the question. CPI is too high. Bailey was out this morning as well, saying more hikes are likely, and the efforts to bring inflation under control are likely to go on for 18 to 24 months. So that suggests policy being tighter for a extended period. Again, we've had the market bringing down expectations for how high the Bank of England interest rate will go. I still say that's going to be bollocks. They're going to be 5% at the very least, but we shall wait and see. Also this morning, Russia came out saying that they are going to meet the US late November, early December for talks on the what's called the New START treaty to do with nuclear arms and that sort of thing. So everything that's been going on with Russia and the Ukraine and the withdrawal, there's been some real heightened talk on a possible, I wouldn't call it ceasefire, but some thawing in what's going on there. Maybe this withdrawal in Kherson and setting up either side of the river could lead to some sort of negotiation possibilities. It's all very fluffy and up in the air, so we're not taking anything other than with pinches of salt. But Russia and US talking in late Nov, early Dec, you never know what might come from that. Couple of bits of data out today. I'm not sure it's going to make much difference to anything in markets. We had GDP from the UK coming in, get rid of that, coming in negative on the quarter for the preliminary reading, minus 0.2%. No real shock there. Some of the numbers not looking too bad. Construction wasn't too bad in September. The services number, index of services in the GDP report, came in flat. So that wasn't as bad as expected. Obviously, flat isn't anything, but it wasn't a negative. And as you can see, the industrial production coming in a bit negative, manufacturing flat. So it's all a bit flattish, if you like. But GDP going into the negative, that's been picked up a lot in the UK press. We're going to be seeing it everywhere. That's under no doubt. But the numbers there, getting people in the UK all hot and flustered. It's not stopping cable from rallying, as we can see on the charts. Germany's CPI there, matching the flash numbers, 10.4% in the CPI, 11.6% in the HICP, so no change there. Headline wise, I think that's it. Kay, you got anything on your blotter?
On the data, no.
Just on the headlines or anything else? Anything I've missed?
On the data, no, but let me quickly run through something that I saw. Yeah, people have to forgive me because before the flow show I went out to get a double stabbing for COVID and normal flu, so I'm a little behind on what's going on in the news side. Yeah, the only thing is that an ex-member of the Bank of Japan, I don't know if you mentioned that already, said that they're expecting to see a shift in the Japanese monetary policy, but only after Kuroda steps down. So that's something that we have already been talking about, that Kuroda is likely to continue as is until the end of his tenure in March next year. But bear in mind, we do have a December meeting, and as I said, they already surprised us twice. Not a lot over the past 10 years, but who knows, right? But so the general feeling is in Japan itself is that Bank of Japan, no change until the end of Kuroda's reign as the headmaster of the sake barrel, and then see what happens once he's gone. So that was a little piece I picked up overnight, but for the rest, I think you pretty much covered everything.
Yeah, cool. Thanks, mate. Right, so where do we start on the charts? This is one of those days where you've got to be careful of the techs. They don't matter to some aspects. You know, if you're trying to catch a knife in dollar yen, you could have tried against the 38th 61.2 fib, the 50 fib, you might want to try against the 61.8 fib. It becomes a question of, if you're trying to catch this knife, how many fingers do you want to lose before you make some money out of it? So as far as the levels are concerned, yeah, we can look at the text. We've got ideas. You know, this is a bit of a zone down here. It was one of the prior highs that we hit for a decent amount of time through August. We've just carved through that as well. So the techs aren't really standing up to much, and you've got to be careful. So my best advice for, if you're looking at something like dollar yen or any of the pairs dollar pairs that are moving wild at the moment, before you start trying to catch a knife, you want to look for certain things to happen, and that's for a low to get made initially, and then you want to see that low held, and you want to see it held for a significant period of time. So this 141.50 area we had yesterday came and held, then we had a little nudge below, then it bounced, all well and good. Then we broke it not long after. Okay, so that tells you we're not ready to find a bottom yet. Irrespective of what we had a bounce here, then we fell down again. So what you're looking for is probably this sort of pattern here, something up here. Let's see, just if I can highlight that. Oh, come on, where are you going? So just something like that in there, where you get a sustained period of finding a bottom. Okay, that's what you want to look at in the price action, be it whatever chart you're looking at, 15-minute, 20-minute, hours, 4 hours, whatever. Once you start to see that sort of thing happening, you get a bit more sense, a bit more conviction that perhaps for now we've stopped this move. Now, this is a sort of thing you can look at any pair after any particular move. You can look at it long-term, short-term, whatever. But for catching knives, that's what you want to look at. And I'll use this Aussie dollar as an example. Okay, here we had a massive trend lower all the way down. Wouldn't stop falling, wouldn't stop falling, wouldn't stop falling. Then you get to a point where it finds a low. Then you start seeing the lows stepping up a bit. And this happens over a decent period of time. This is when you get a bit of conviction that, okay, maybe we've just stopped falling for now. Doesn't mean we can't carry on falling, but instead of every 5 minutes we're making a new low, all of a sudden we're not making new lows, and then we're making higher lows. That's what you look at when you want to look to trade these big moves and maybe fade them, get in on the other side or whatever. This was the whole basis for my Aussie dollar trade. Two reasons: I was getting more bullish, more bearish the US dollar, but the price action was telling me that we've stopped going down. It gave me conviction to start building my longs. As you know, I've been longing this for quite a while. I've just started taking a bit of profit up here, break of the zone up here. These are big moves. Okay, I'm not afraid to admit no one was expecting this type of move after that CPI report yesterday. It was a complete shock. So, you know, it shows you that it doesn't matter how long you're in this business, you can still be surprised. But this is why I've been bearish the dollar for a while, because I'm expecting the dollar to act like this, not as violently as this, but over the next few months, this is what I've been planning for and trading for. I got out my dollar yen short yesterday, 141s. I thought I was doing all right in there. Big move already. Didn't want to push the boat too far and see a big snapback. I got out, and here we are, some 200 pips lower since then. So it's been very surprising. And if you're going to try and trade it, you've got to be careful how you trade it. Now, as Kay's mentioned, you know, there's probably lots of people who are thinking, oh, it's a big move, I want a piece of it, I'm going to sell every rally. Again, you've got to be careful. You've got to pick your spots. You've got to find, where are we going to find the resistance levels coming in? Because you can support here into 140, sell it, and boom, we're up at 142 in a blink of an eye. So again, you know, look at these areas that have developed on the way down. 141.50 may be an area, because it's been a bit support resistance. In the last move, when we broke down, came in as resistance straight after. So these are the sorts of areas you want to look at if you want to sell a rally, and be patient for it. Don't try and chase the market on either side. And also don't go too heavy in your trades, because you don't want to you know, risk 70, 80, 90 pips trading a level in there. As I say, it could be 142, 143 in a blink of an eye if there's a comment or a headline. So you want to keep your risk low, reduce your trade sizes, keep your stops fairly tight. It's okay to lose a few trades as long as they're small and they don't impact your account. Because remember, the more trades you lose, the more you've got to make back in the winners if you're trading intraday. So that's a view of how to trade it. As I'm going to be a bit sitting on my hands today, managing what I've got, looking at some of the other pairs. I'm not ready to start catching knives just yet until I see some decent confirmation coming in from the price action that shows me, okay, now is potentially the time to try and get in some of these trades. Okay, do you want to have a little look around some of your stuff then?
Yeah, we had this issue on TradingView. I hope that stuff is updated right now. Right, let's go to the flavor of the day, and let me know when we are into the top of the hour, please, Ryan, so we can
we'll do, mate.
Be quiet. So the one thing I was looking at this morning was the width of this channel in dollar yen, and there was this 139. It's around 139.80. But if I take the whole move, which I should have done perhaps, let me quickly do the exercise with you, and then add it on to where we broke from the break. That's around 138.25. But listen, I'm also watching this 138.60s. It's a 61.8 of the last big ramp higher in the dollar yen, and I think it could be a little bit sort of important. We're actually crawling back up now towards the 140 level. As people know in our room, I've been since this morning trying to catch a few knives. Yesterday, I had a stop in through the data at 145.60, which had been done. So I took a really nice move on that one, lower in the dollar yen. But then around here, around this, I saw some support around this 141.80, 90 level, and that's where I basically took most of it back. And this morning, to me, it looks like a little bit overdone. But as Ryan already said, we need to be ultra careful. And I'm just going to add a couple of things to what's been said. So there's been questions about is the MOF helping this move lower in the dollar yen. Of course, I can't say 100% is not true, but having been a market maker in the yen pairs for 20 years, yesterday already I could pretty safely say this is not their style. They will not go and push the market to where it hurts. For instance, they are just there to stop volatility when the yen doesn't go in the way they want it to. Because if they would really stop any volatility, they should have intervened yesterday around 142 to buy it. No, the main move has been done really by more medium and longer term accounts unwinding the big short yen. So it started with the dollar yen finally yesterday, people starting to give up on the CPI. And then the follow through overnight and this morning is really seen through the crosses in the Japanese yen. And if you look at stuff like euro yen, for instance, we saw a big drop. If you look at
Okay.
Yeah, I know.
Yeah, we got about 10 seconds, mate.
If you look at sterling yen, for instance, it also collapsed. So and now we are going to observe 2 minutes of silence. Thank you.
Thanks very much, everybody.
Thank you, thank you. Okay, we saw to continue. We saw this big slap in all the yen pairs since yesterday. We just had a quick rally in the dollar yen back up to close to 140, but already rejected. It's going fast. We just done roughly 1% over the time that we were being quiet on the rebound. So sterling yen, for instance, had a big break. The first level was around 168 and a half, 169, which capped, and then yesterday we broken through this 166 and a half, and we are already trading like 300 points lower. So keep an eye on those yen pairs today. I don't feel inclined to trade much of cross yen today because it's really wild. But as I've been saying, and as people know in the room, I think the dollar yen, even though we also have to be very, very cautious with it, I am observing this line. So I did catch a knife this morning. I'm actively trading it around. My position size is no more than a third of what I would normally have in position. So I'm really doing it on a cautious basis, not to blow up my account, not to put my account too much at risk. But I do think we may have seen the worst. It all depends what's going to happen. Even with the states being partially off, most of the FX people will be in the market this afternoon. So be very careful with what happens in the states, and be careful with this. Call it 138.5 3/4 zone in the dollar yen. As I said, I'm not going to touch the cross yen. It's a bit wild for my liking today. Then what happened to the dollar Canada? It didn't escape from the dollar selling. There was some decent supports here around 133.25, but the downtrend, it's more than just a flag now, right? A flag should have stopped here and then started to go up again. The downtrend, I think, is around 132.5 today, and I'm keeping an eye on 132, the figure as well. Globally, I'm going to say we've had this weak CPI print. We've seen also weaker leading indicators in the States. But we still have to see the jobs market rollover, right? It could, as it is lagging, we could see a bad report coming up early December in the jobs market. In which case, then I think for the end of the year, the dollar is going to run into all sorts of trouble. But if that one holds up, it's music for later, of course. But if that one holds up, we could see a rebound in the dollar for the end of the year. But on the day, I'd say keep an eye on levels in the dollars. This one, if we would get closer to 132.5, it could be enough on the day. And then cable, I'm quickly going to mention the cable. Cable broke out of that downward channel. Also, after a couple of tries and errors and failures, it finally broke out thanks to the dollar weakness overall. But I'm keeping a very close eye, and I've always done it in the more medium term, because in July we came on this 117.5 zone and bounced for 5 big figures. Then we tried it again. We had again a false break before another percent back up. Then we broken below. We retested it. We went down to 114 and we retested the zone again. So I'm keeping a close eye on what's going to happen to close the week around this 117, call it 40-60 zone, okay? So we tried it twice this morning, and it failed above so far. For some reason, euro sterling is coming in bid again. That euro sterling I need to show to you as well, because it looks to me that there's a couple of really strong range players in there. But so watch the close, I think, of the week around 117.60 the cable. And then euro sterling. So we had this run up to the high of this little, I don't know how you call it, this little channel, whatever. But then if you look at it from our medium point of view, we're doing like inverse J's, like I don't know what kind of pattern this could be, but then we moved above, went up to this 88.25, got fiercely rejected. I think there's some really decent range players going on now. We went back below 87.40, which was a support there, took some stops out, but 87, the figure, is rock solid right now. So perhaps we can kill this line for the time being and just look at this range 87 to 88.25 right now on the euro sterling, and it looks really solid. It was a big rejection as well from the top, so respect both areas, I would say. And there I want to ask Ryan a little question. You know, Ryan, Sudak and Martin, the Northern Ireland guy, they met yesterday, and they came out both pretty, how shall I say, pretty optimistic out of the meeting. I know it still has to go in front of the EU and whatever, but I'm a little surprised euro sterling is higher today. Are you, or not at all?
I am and I'm not. There's obviously far bigger things going on in the world than Brexit. In the grand scheme of things, we're still only talking about a real tiny portion of the whole thing. So it's not. It's a big deal when there's nothing going on. It's not such a big deal when there's bigger things going on, if you catch my drift. Yeah, it's probably going to be positive, but it's that thing. It's probably positive for both sides because it means no more fighting and everyone's going to get on nicely. So yeah, at the moment, I wouldn't be buying the quid on a resolution now, personally, because as you rightly pointed out, in what's happening in euro sterling it's all over the shop at the moment. I think all we're seeing in that pair is just the volatility difference still between the UK or the pound and the euro versus the dollar. The cable moves probably a third as fast as euro dollar does, if not more, when we get these big moves. So yeah, I wouldn't trade the pound on the Brexit side of it amid everything that's going on right now.
Okay, unless we get like definitive arrangements or denials from EU side, perhaps.
Yeah, maybe, but I still don't think it's going to be a big reaction. I don't think you're going to see 100 pip gain in euro sterling on Sunak coming out and saying that the NI protocol is signed, sealed, and delivered. No. I'll be very surprised.
Euro sterling drop, you mean?
Yeah. Pound gain, yeah.
Yeah, pound gain, yeah. Okay, all right, mate. All right, let's look at, because we are now already bit into the meeting or the show. Let's look at some of the emergings. And again, I have to apologize here because we've had this TradingView breakup earlier. It was FXCM having issues, it seems. But anyway, dollar mix, it's broken. It's broken sub this prior low on the final decision of, and a little bit before, and then on the decision of Banxico. But we found pretty quickly support, and I think it also has to do with the revenge of the low yielders. Euromex is trading quite a bit higher, and I haven't charted it, but people who have been in MEX yen positions, for instance, because that was the best of the best carry trades that you could imagine. I think in all this violence, what's happened in the yen is that people have been selling chunks of MEX yen as well as other crosses. So I think more of that has to do with what's happening in the dollar mix right now. Also, Banxico was more or less expected, yet there's still now a central bank which applies interest rates at 10%, which is massively higher than anywhere else. I'm just a little cautious here today in case we see more MEX unwinds. And one only has to look at the euro mix. We had this. I'm going to put it on a shorter time frame. We had this rally yesterday, short covering in the euro, and then we went higher here, and we came down on the Mexico, but this is not even 0.5% lower, and we're already started to rebound, and I think that has to do with what's happening in the low yielders when other central banks are starting to pivot. Is that people who have carry positions on, they are unwinding those carry positions, and that is likely the move we are seeing now. I'm really sitting on my hands. I have nothing left, and right now, and I'm sitting on my hands, and I think the best thing to do is wait for next week. If we start to roll over again, I may start to move into this again, but I'm really sitting on my hands right now just to see what the end of the week brings, because we can't rule out any more of the same stuff. Dollar mix may be a bit of a different one. If you want to play off this 40-42, perhaps the prior low as well, 44 level, yeah, be my guest. Just make sure not to put your stops too far away, because more than anything else, more than direction or not, is it worth to really jump into something right now before the weekend? Also, as Ryan already mentioned, we have statements from China to expect over the weekend. We have the stuff in Ukraine going on. Whether they talk or not could also influence markets on the Monday opening. So for a really short-term play, one can lean against this 19, 40, $43 mix if we think the dollar is not done yet. But I wouldn't even bet on too much of a dollar side ahead of the weekend. So the last one I wanted to show today is this dollar China. Exactly, there's to me we're coming slowly into real support zone. I've already last night actually I put an order in at 707 to buy dollar China, and then before going to bed I pulled it because I said, like, now, I mean, I don't know what's going to happen to this dollar. I don't know what's happening elsewhere, and if we break sub 715, 17, it can go fast. It would have been a decent trade, but I would probably have already lobbed it out, not feeling too comfortable with what's going to happen over the weekend. But anyway, to me, the big zone is going to be here, the prior spike low around 701, and then all the way down to this exactly where Ryan had it, 697. That's the zone. It's a bit the 99 in the euro dollar. Recall when I said, like, 99 is the zone where parity is lost or the battle for parity is lost or won. It'd been watered down afterwards, but remember when we broke 99, we had the 3% lower in the euro dollar as well. So this is it for the dollar China. I think 697, 701. This is where it plays ball or not. If not, and if we confirm through 695, it's perhaps all over. But that will depend on how fast and how big the reopening is in China. That is really where things will be decided. And if it's a slow reopening, and if I see levels around this the figure 701 or whatever, I may start to build in a small long again, and with stops below this 695, because the slower it goes, the less strong impact it should have. And then in the meantime, we still with a PBOC that injects money, and with a Chinese government that is trying to support the economy. Damien, interest rates and yen still widespread versus dollar? Yeah, absolutely, absolutely. But we have to respect what's happening now and the violent unwinds that we are seeing now, right? As I said, I try to catch an eye because I still think most of the fundamentals are playing against the yen, but One other thing that I said, and I think on the flow through yesterday, but for sure on face, is that the current account in Japan is back to positive territory. I might actually have forgotten to mention that. So the current account is back into positive territory in Japan. So that's one of the fundamental reasons that drops for really being outright bearish on the Japanese yen. And with that, Ryan, I give it back to you.
Thank you very much, mate. Yeah, we haven't even looked at, just reviewed the data yesterday. As we were saying, yesterday, the perfect storm for CPI either way would either be both going the same way, be it up or down, and we got the down move. Headline down 7.7 or down to 7.7 from 8.2 prior, much lower than expectations. Also, the cores turned around. That was very important as well. 6.3%, you know, beating or less than expectations, down 3 pips on the month before. So what you have to look at, you know, we've been speaking about this for a long while, what happens to inflation? Now, you may recall, I've been saying for weeks now, I'm expecting inflation to moderate. Does it mean this is the beginning of the end? Who knows? But now we've got a possible trend in play because this is the 4th headline reading in CPI that's been lower. So we have the signals that potentially we've peaked in inflation are coming lower. But what does it mean for the Fed? Does it mean that the next time Powell makes an appearance, he's going to turn around and say, we're pausing rates and our next move is going to be cutting rates? Absolutely not. So what we have a risk now of is Powell popping up anywhere. I don't know if he's got anything scheduled next week. We'll take a look. But he can pop up at any moment, do a TV press show, whatever, and say, yeah, that CPI number was okay. It's going the right way, but we're still taking rates up to 5%, 4.5%, 5%. We are not stopping what we're doing now. And his message, as we've been saying, the optics of his message are more important than what the Fed actually does. He's potentially, if he lets this move continue, he's going to lose control again, because the market's already pricing out all the good work they've done. Look at the yields, look at 10-year yields, look at 5-year yields, maybe even look at 2-year yields. You know, we're undoing a lot of the hawkish bias that he put in, and he can't lose that because it undoes the job for him. So if people don't think rates are going up, then inflation has a chance to get back in control, and that rate hikes won't affect inflation so much. So it's all about this credibility call. And I think he's going to come out at the next opportunity, whenever that may be, and remake the case for that they're going to continue with hikes. And that's going to be a big risk for this move. Now, that's probably going to be a rally you, me, and the dog down the road are going to jump into and fade, and we may be right, but we have to see what the market does with it first. I personally think a lot of this move is going too far, has gone too far, but as Kay said, not quite ready to fight it just yet, especially going into a weekend. So you need to bear that in mind. The pivoters are having their day again. They've made the most of it. They're still up for getting a slap around the chops if that's what Powell decides to do. So what do we do from here? What I do often is take a look at the long view. And if we look at, let's go into euro dollar, maybe easier. Right.
Yeah, we are not seeing your screen, right?
Oh, we're not showing my screen. Right, let's share it up then. So you saw none of that. Brilliant. Okay. Right, so I was talking about the CPI, obviously, and the numbers. 6.3 down on the core, down on the headline number there. So you can see much softer than what was expected. Back to the chart, let's look at the big picture. So we've seen the euro dollar coming off from the 122s, a one-way ticket all the way down to the lows here. Where are we now? We're not even close to the 38.2 fib. So if you're talking trends, if you're looking at the bigger picture, we don't even start to turn around the trend until we get above there. You know, we could get up close to it, up to the big 105 that was a big area previously, hit the fib, bang, come all the way back down again. This is what you need to look at in terms of matching what the moves have done in terms of the bigger trends. Aussie dollar in the same picture, not even close to the 38.2 of that move. Cable, just getting up there, getting towards it, 1.1840. A bigger move than what we've seen. Obviously, we had that messing around with the mini blowout, which took it much lower. So much bigger pip move than euro dollar. Hence why it can snap back, more strongly. But we're only close to the 38.2 of this whole trend. So these are the big long levels. You have to look at the wider picture. We've had a 500 pip move or whatever in dollar yen. We've had the same 200, 300, 400 pip moves in the other pairs. But what has it done in the bigger picture? Has it really changed the trend? We won't know until it starts breaking some of these big fib levels. Then we'll know for sure. Maybe we're reversing a real good chunk of these moves, because this might only be the beginning. We could tack on another 2,000 pips and be up here somewhere. That's what you need to look at. That's what you're going to want to trade. Okay, because this has taken a long time to do all this. So, as I say, going forward, I think there's lots that we need to discover first before we understand what's going on with this move after the CPI numbers. Know your risks. Know that Powell is still a risk. Know that the data is still a risk. We get a 500k NFP in the next report, it's going to blow a lot of this out of the water, and the pivoters are going to get their asses kicked again. So we haven't changed anything really just yet, but all trends start somewhere. And on that note, I hope you had a good day yesterday. I hope there was no painful trades or anything like that. Be mindful of the volatility that we'll get for the rest of the day into the weekend. Trade safe. If you've had a good week, switch your computer off and go and enjoy a longer weekend. There's nothing wrong with that. Apart from that, thank you all for coming to the Flow Show as usual all this week. It is a pleasure to do this for you guys and girls. I hope we steer you good. Thanks to Kay. I'll give a big thanks to Stell for coming on this week. Have a great weekend, everybody, and we'll see you bright and breezy on Monday.
Thanks, everybody. Have a great weekend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.